Happy Monday, traders. Well, the market is well and truly focused just on one thing. So to start the week, and that is obviously what is happening in the Middle East, the war between Iran and the US, and the fact that it continues to escalate. And yes, it escalated on the weekend, and it seems as if both sides now are starting to cross a few red lines. So one of the things previously, both Iran and the US were just targeting military targets, but now they've actually moved on to actually bombing infrastructure, which has obviously been a red line. And then also on the weekend, we did get news that unfortunately 3 US soldiers died on the weekend. That takes their total up to 17 that have died during this conflict. So that's obviously a big red line for the US. But one of the things that we haven't seen yet, a red line that hasn't been crossed, is that both Iran and the US have not really started targeting energy infrastructure. No doubt, if that does start at some stage, that would really, really hit markets hard. We also haven't seen Israel come back into the conflict yet either. But look, for all the negative headlines that we got over the weekend, and the fact that this is escalating, it does seem like it's escalating out of control. There doesn't seem to be any sort of short-term off-ramps. So yes, expect this to continue into the week. But markets opening so far Monday have opened a touch subdued compared to maybe what the headlines warrant. So if you look at the most important market, that is crude. Yes, of course, look, that's the market that's reacted the most. It has gapped up open, something that we obviously warned on Friday, that you do have gap risk. It's the second week in a row we've seen crude gap open higher. And so we're now pushing up towards $85, and it's up about 3% in early Monday trading. So at the start of July, we were pretty much at the lows since the war started, around $68, $70. And so, we're pushing up now 15-20% gains for crude so far in July. So crude oil longs have certainly been paid, and paid quite handsomely. So what are the next levels? Obviously, look, $90 is probably going to be the next major target for the crude oil bulls. And no doubt, if we do get above 90, then that $100 psychological level comes back into play. On the downside, obviously, market and traders are obviously going to be start good support around $80 and just below. I'd imagine now you're going to see all the buyers lining up. But obviously, with what's going on, very hard to make a case to be short crude. And bias 100% to stay long crude. Look, the highs of the war at $120, and what is happening now is really a big escalation. So I'm actually quite surprised that we are trading, even though we are trading higher at $85 and gapped open this weekend. I think it's still mispriced. It should be trading higher. Anyway, let's see. Other markets, US equity markets, S&P, NASDAQ, pretty much open square. So ignoring all of this at the moment, but it is early Asia so far. One of the markets that isn't open yet is the bond market. US 2 yields, they closed at around just below 4.2%, 10s at 4.55. So I'd imagine with crude higher, yes, we're going to see bond yields higher. And that's one of the things that potentially that can impact all the other markets. So just let's see exactly how high they go. But obviously, the higher they spike, the more bearish it is going to be for the broader markets. Gold at the moment, look, it's been struggling. Obviously, in the last couple of months, and we've been trading just around 4,000. We've opened just below 4,000. It's obviously got an inverse relationship with crude. Crude goes up, gold goes lower. Obviously impacted by high yields as well, and a high USD. Support is at last week's low, which we bounced off quite a few times. It's around about a 39.50 area. Obviously that breaks, then we can see maybe a sharper move lower there, but certainly I don't think we're ready to be buying the dips in gold just yet. Currency market, DXY is pretty much open flat, so haven't seen much action, but I'd imagine currency markets are waiting for the bond market to open, see exactly what happens to yields, and obviously if we get a decent spike in yields, then that US dollar bid is certainly going to come in. Dollar yen, obviously big focus. You know, we're around that 162.50 area, and at some stage, probably will have a run back up towards 163, which is capped as the new 40-year high. So no doubt that's going to be displeasing the Japanese. And again, yes, intervention risk is certainly live there at some stage. But look, the key takeaways is that the market at the moment is purely focused on the headlines we're getting out of the Middle East, the escalation we're getting out of the Middle East, and obviously it doesn't matter what market you are trading, you are a crude trader. At the moment, yes, we're only up around about 3% on crude. It's very early. But you know, the higher crude spikes, no doubt that is going to be bearish for the broader market. So keep an eye on crude. That's the key takeaway. Good luck with your trades. We'll check back in with you shortly.